management agreements in India are no longer what they were. The market has matured, owners have found their voice. The terms being signed today look very different from those signed a decade ago, and as hospitality landscape continues to evolve, we have our next speaker, Mr. Sujjain Talwar, co-founding partner, Economic Law Practice, to take you through the nuances of a hotel management agreement in today's rapidly growing market.
Hi, everybody. Thanks for inviting me back. Normally, I get boycotted by the brands because I tend to act more for owners. And this time I was told that very strictly, don't go at them like you normally do, but tell me in the last year how the rules have changed. Well, the rules are always there. It was just that the operators continued to send that document from the United States, filled with, wonderful verbiage, which many owners took as trust and accepted and signed. No longer, I think, that is the complete picture. You are seeing, like we heard, long-term capital, patient capital, but not blind. They are asking for performance, they are asking for rights, and they are asking for the ability to shorten that term and exit with dignity if needed. I think these are the four themes that have come through in the last 1 year or so, where you see many, many brand owners now moving to India. Clearly, the opportunity is there, but you're also seeing that capital is in competition, either with real estate or other businesses that capital is otherwise deployed for. And therefore, whether you are investing in a hotel, in retail, real estate, or in your very own business, you have to measure your capital and the return on it. And you're not getting it just now from your managers as a guarantee. Not that every business gives it. But in a business where your asset is yours and you control its operations, you are responsible for it. But if the asset is yours and the brand says, I will control it, and I will tell you when you should deploy capital here, there, and when, I think that's when the brand needs to stand up and say, fine, I am forcing you to spend, but I will ensure that you get your returns. And how will you do that? There are the usual market tests, whether it is RevPAR, whether it is GoPAR in some states, or whether it is your own budget that your own manager is giving you 1 year and says that, even though I'm giving you a budget of so-and-so, I will not even reach 80, 85 in 12 months. Forget what you are doing as compared to others in the market. So I think a time has come when owners are looking at 3 or 4 things, as I said, right to exit if performance is not there. And let's face it, you saw just now, there was so much capital saying, we would love to buy a hotel. But when you read the fine print of that management agreement, you will find that in fact your right to sell is encumbered. The one you need to sell it to, of course, doesn't have to be a competitor of your manager, has to be having a favorable relationship with the manager. Yes, he has the capital to buy you, but he still needs to fulfill some tests. You don't find that in many other industries, where someone else places these burdens on you without owning 1 rupee in you. Okay? And I think that is the change that is coming, even today when it comes to fees. Okay? We have the base fee, which we have accepted today as 2, 3, 4%, okay? Something that the brand is, demanding, and owners are saying, chalo chalta hai, okay? But when it comes to profit, there is a big difference. Although it looks aligned that the more operating profit you make, the more fees you need to give, the reality is, as we heard today, is that most assets are built with debt. And managers are dictating what should be the debt equity ratio. So they are coming into your project saying, okay, you can take 60-40 or 50-50 or 70-30, whatever may be the affordability in that particular sector. But when it comes to GOP, even a bit of that interest, which has to be counted as part of that capital's cost, is ignored. And the manager wants the fee immediately on the operating profit, forgetting about what the owner has to pay the bank to keep that capital asset going, to then pay your fees. Number one, I see that being an important factor coming into every fee negotiation. Number two, what is FF&E reserve? Nothing but 3-4% of the owner's money, okay, being parked somewhere or the other. And yes, if you have a good relationship with the manager, and the word they use, we are giving you a concession. We will put it in a side letter, or we will give you a notional one. It's my money, not yours, okay? So what concession are you giving? And again, that 4% which you put aside is again not counted in your calculation of your GOP. So your GOP is that 10% that you're giving to the bank, 4% of your own that you're keeping aside is not to be deducted when you calculate GOP. And so you keep on paying 8%, 9% of GOP, because that's how it was fashioned. That's how it was thrust on us. But I think times have come where this kind of change will occur. This long-term capital, patient capital, capital that is now much more aware. Okay, it was first a relationship contract, the hotel management agreement. It's a lovely relationship. Principal agent. What has happened over the last 4-5 years? Every operator has shied away from their fiduciary obligation. If you are an agent, you are in a fiduciary bind under law to act. I wish I could move these slides, but okay, I forgot to tell you that we finished 25 years, but that's thanks to you guys. We are learning all of this. This is not that I'm a hotelier. But I'll come back to these points. But yeah, if you are in a fiduciary relationship, these are the things that come guaranteed with it, regardless of what those other clauses say. But which operator is willing to give you these? Not even one. Because there, however nice the business development person is over here, who will be very charming when it comes to getting the hotel done, when it goes back to their legal team, all of this gets kicked out. Okay? Or gets reduced to just one minuscule. So, if you have to take away even one thing today from my talk and my experience of what going forward should be, whether you negotiate your fees well, whether you negotiate your termination rights well, whether you negotiate that silly performance test, okay? So performance test was just throw out of the window, okay? It's a mirage. Please get these things into your contract, and you are securing your investors, you are securing your promoters, you are securing your creditors, everyone, by getting this obligation from your manager, only because you have been told in your contract, step away, don't interfere in operations, I will decide who is the GM, I will decide the room rates, I will decide the salaries, I will also keep the guest data, okay? And God forbid, if there is a claim, and that kind of ridiculous relationship, I think hats off to the operators, how they have managed to keep this going, okay? Yes, do you need a brand? 100%. To do an unbranded hotel, and I've seen my experience, great brand, you are getting about 4,000 night. Brand went away, owner said, I know how to run the hotel, I'll do it. Same hotel, same location, same. Went back to a brand, and the room rates are 25 and above. Story is the brand. Of course, you need the brand. No one's going to get away from that, which is why you need a HMA. But do you need only a HMA? Can you move to a franchise? Is that a better way to go? You heard that that was possible. Okay. Now, go back to those few points. You asked me to tell you what is happening in the industry. Okay. 2-3 points people are realizing now. And you can only realize after you go through some experience. Because none of us are born hoteliers or learn hotel law in college, right? You just learn it through experience and largely through all of you. Yeah, loyalty program is a great program. And some of the operators have done it very, very well and made it almost like you can list the loyalty program as a separate entity the way they have done it. But now look at whose cost. Okay, we all go to city hotels. We love to use our loyalty points. Okay, where do we want to redeem it? In a resort, or in a lodge, or in a safari place. Now what happens to that owner? He's very happy that someone is coming. But he doesn't know at the time of signing the contract at what rate is that person going to get. Because that loyalty program, whose points get redeemed, has to pay the owner something, right? And the better you are in your loyalty program, you will get 2 drinks free, you will get upgraded to a suite, and the best thing is that owner does not even get the best available rate that day. Because that's never negotiated in the contract. That depends on what the loyalty program manager decides. And you are signing this off for 20, 25 years. Which other business are you doing this, where you tell the other side, you keep on putting your charges, okay, let us call them, they are not so opaque anymore, they are not hidden, they are told to you that they will also change. But can they today tell you what was the value of this fee that you paid or that advertising fee that you paid? Can you really show me a return of investment on that money? If I am doing it with my own company, right, I will ask, what return did I get for this? But when I'm giving it to the manager, I'm just, after all, I've given the bank account control also to the manager. All he's saying is, under the contract, I have a right to take all of this. And these changes with time, although the cost should come down because more hotels are coming into the picture, do you find that? You find I'm actually paying more, okay? So those kind of fees, I think people are challenging more and more because on the term sheet, you get your incentive and your GOP and your base fee. You are not told each and every other fee that comes. It is only when the CFO has to start paying through the various invoices that come, and that too to foreign entities, which brings me to the next point. Why do we have to earn in rupees but pay all the fees in dollars at the kind of rate that we are going between dollar and rupee? Tell me, why would you want to agree to that? Just because they choose it? Is that fair to you? Why can't you either peg a rate, okay, or say that I don't care, you move these businesses to India, if this is the market that you so much love, and charge in rupees. You take the exchange risk. Why should I do it? Okay? So that's another big change I'm seeing. And auditors are pointing this out. Investors are pointing this out, that you as a fiduciary, you are a fund manager, and you are letting all this go. How are you doing your duty to me? Okay? So impact of the rupee, the loyalty program we talked about. A little bit you can talk about, yes, when contracts were written, India may not have been that sophisticated a market for legal services. It may not have been such a sophisticated market for judgments and arbitration. But it is not a banana republic, that every damn term sheet that comes has to say that no, it will be ICC, it will be Singapore. What is it? The asset is here, the owner is here, the dispute occurs here, but you want the arbitration to occur under some other law, under some other venue. Why? Would you do that if you were in the UK or in the US? No. So don't treat India and Indians as some kind of banana republic. Okay? Then, percentage deviations, at least now I'm finding that almost every contract, there's quite a strict line on deviations, even 4-5% if it deviates, you come back to the owner, explain it. If the ROI is there, of course the owner will pay. The owner has already agreed to take on this asset, but not at an indefinite cost, that every time you need money, we just put equity. Effectively, that's what you're doing. Then, there are two other liabilities that have come up recently, which will have to be catered for in your hotel management agreement. One is the data law. Under India's data law, which obviously all operators are familiar with, same as GDPR, there is a penalty of up to 250 crores. And you know, when government has written into a statute that it has a right to take up to 250 crores, believe me, that's another method of just taxing it. They will find ways in which data, once breached, they will put in this kind of penalty. And of course, your hotel management agreement, it says operator will not pay 1 rupee. Even if the person whom they have employed, trained, supervised, controlled, if those people breach any of the data rules, owner, you pay. Don't touch my insurance. Okay? So that's a huge liability. You have to see it. It will come. And it will happen. It will happen. It's a matter of 16 months. We are all being given time to fix as many processes as we can. But that's another issue that's coming up in the HMAs. And the last issue is on employee. You must have heard the labor codes have come into force. The bill will go up, but that, of course, is to the owner's account. So HMAs won't really bother about that, except give owners a little bit more say in that budget approval process, where out of the great big budget that is where owners get approval, 80% you can't talk about. You can't decide the cost of people. You can't decide the brand manager's fees. You can't decide on all those hidden costs. Nothing like that you have got to say. Because why? I am the operator. You cannot interfere in what I'm doing. But when it comes to liability, unless you can prove that I took a bomb and, hit this hotel, willfully misconducting and gross negligence, I will not pay a pie. So I think while of course every operator will say, I'm only getting 10-12% from this, why should I, take that much risk? You are supervising it. Otherwise, change it to a franchise, because you're taking almost as much fees there also. So take risk where you are taking control. Increase your fees if you want to. I don't think owners will say no, provided all these guardrails are kept. You cannot expect every owner to take so much risk and you still take your fees despite all of this. It's just not a fair system, and it will change. Maybe not in my time, but I'm telling you in the next 5-7 years, it will change. People will see cases come up, especially in data, employees, etc. And courts will come to your favor finally. Even though the manager says, I am not your agent, if you see the contract, it says, I will do everything on your behalf. You give me a license to enter into these contracts. If this is not an agency, then what is? So the courts will finally come to your help, but don't wait for that. Write it in your contracts and be confident right up front. Okay, I think I've exceeded my time and my words. So I'll see you all at lunch. Thank you.